The 10th reason for the continuous fall of the rupee is the widening trade deficit. India imports more goods and services than it exports, especially in sectors like crude oil and electronics. This imbalance puts pressure on the rupee, as more dollars are needed to pay for imports, while earnings in foreign currencies from exports are comparatively lower. A persistent trade deficit weakens the currency as demand for dollars surpasses the inflow from exports. At the 9th position is the rising global crude oil prices. India is heavily reliant on imported oil, and an increase in crude prices means higher import bills. Since oil is traded in dollars, this drives up demand for the US currency, further depleting India's foreign reserves and weakening the rupee. The dependence on imports for energy makes the rupee particularly vulnerable to fluctuations in global oil markets. 8th in the list is the strengthening of the US dollar itself. When the US Federal Reserve tightens its monetary policy by raising interest rates, the dollar becomes stronger as it attracts investors seeking higher returns. A stronger dollar makes other currencies, including the rupee, weaker in comparison, leading to a depreciation of the Indian currency. The 7th reason is declining foreign investment. A fall in foreign portfolio investment, FPI, and foreign direct investment, FDI, can lead to reduced dollar inflows. Investors often pull out of emerging markets like India during times of global uncertainty, choosing safer assets denominated in dollars. This outflow of capital weakens the rupee further as demand for dollars rises. Ranked 6th is geopolitical instability. Events such as conflicts, sanctions, or political unrest in major regions disrupt global markets and increase risk aversion. Investors tend to flock to safe haven currencies, like the US dollar during such times, leading to a decline in the value of riskier currencies like the rupee. This external factor often amplifies existing vulnerabilities in the Indian economy. The 5th factor is inflationary pressures within India. Persistent inflation erodes the purchasing power of the rupee, making it less attractive to investors. High inflation also reduces competitiveness in exports, as Indian goods become relatively more expensive in global markets. This dual impact of inflation contributes significantly to the weakening of the rupee. 4th in the list is the rising current account deficit, CAD. The CAD represents the difference between the country's outflows and inflows of foreign exchange from trade, investments, and other sources. A growing CAD reflects greater outflows than inflows, putting downward pressure on the rupee. Financing a high CAD often requires drawing from foreign reserves, which further weakens the currency. At the 3rd spot is slow economic growth. When the Indian economy shows signs of sluggish growth, it diminishes investor confidence, reducing foreign inflows. A slowing economy also means reduced export competitiveness as domestic industries struggle to meet demand or innovate. These factors contribute to the rupee's weakening position. The second most significant reason is monetary policy divergence. When the Reserve Bank of India, RBI, maintains a loose monetary policy, while the US Federal Reserve tightens its stance, the interest rate differential widens. This makes Indian assets less attractive compared to dollar-denominated assets, leading to capital outflows and depreciation of the rupee. Finally, the number one reason for the continuous fall of the rupee is global economic uncertainty. Events like a global recession, pandemics, or financial crises create widespread panic and risk aversion among investors. During such times, capital flows out of emerging markets like India and into safe haven assets like the US dollar. This flight to safety causes a sharp depreciation of the rupee, as the demand for dollars surges uncontrollably. These broader systemic challenges exacerbate the vulnerabilities of the Indian currency, pushing it to depreciate further. Thank you for watching. We have some amazing videos coming up, so stay tuned and make sure to hit the subscribe button.